What if I told you that a coin many dismissed as vaporware, a project that's been the subject of skepticism for years, is now showing the early signs of a major breakout? What if I told you that, behind the scenes, powerful players are accumulating millions of dollars worth of this coin, and that its price is creeping toward a critical tipping point? While Bitcoin is grabbing the headlines after smashing past $100,000, there's another asset flying under the radar. It hasn't even hit the mainnet fully, and yet, its price is climbing, its volume is exploding, and something big may be about to happen. I'm talking about Pi Network. And by the time you finish this video, you might look at Pi in a whole new light. Welcome back to the channel. Today, we're peeling back the layers on Picoin's recent surge, the whale activity that's heating up the charts, the rumors of a game-changing announcement, and why $1 might not just be a fantasy anymore, it could be a short-term target. Whether you're a Pi pioneer, a crypto trader, or just curious about what's driving all this sudden excitement, this breakdown is packed with insight you don't want to miss. In the past 24 hours alone, Picoin has surged over 14%, catching serious attention across the crypto community. But this isn't just a single green candle. Over the past week, Pi has climbed more than 23%, showing a steady and aggressive uptrend. This rally is not being driven by hype alone. It's powered by bullish technical signals, increasing volume, and serious accumulation from both whales and institutions. Something is brewing beneath the surface. Technically speaking, Pi has just passed a key resistance level. On May 8, it broke through the 65-cent zone and shot up to 78 cents before meeting resistance. Now, that 78 cents level is serving as a ceiling, but traders are watching it closely. The momentum indicators are flashing bullish across the board. The MACD has formed a golden cross, signaling a potential shift to sustained upward momentum, while the RSI continues to stay in overbought territory. Normally, overbought signals suggest a possible pullback, but when paired with increasing volume, they can actually signal the early stages of a breakout. At the moment, Pi is consolidating between 70 cents and 78 cents. This tight range could mean one thing: the market is coiling up for a bigger move. If the bulls manage to break above the 78 cents resistance decisively, we could be looking at a rapid climb toward 95 cents or even the long-anticipated $1 mark. Many technical analysts are pointing to a symmetrical triangle forming on the daily chart. That pattern is known for generating explosive breakouts. The last time we saw this with a meme coin PEPE, it shot up more than 70% in a matter of days. Could Pi be preparing for a similar move? The price action isn't the only thing signaling something big. Behind the scenes, whales are making moves. Massive ones. According to blockchain data, over 20 million Pi tokens, valued at approximately $14 million, were recently transferred from the exchange OKX into private wallets. This type of transfer is often seen as a long-term accumulation strategy. These aren't short-term trades. These are strategic positions being built quietly, in preparation for something potentially huge. And it's not just individual whales. Institutions are getting involved too. Banxa, a well-known global payments platform, recently acquired 10 million Pi tokens. This move came shortly after the company received KYB Know Your Business approval, which allows it to offer Picoin trading globally. That's significant. When companies like Banxa step in and start buying millions of tokens, it's a clear sign of growing institutional interest. And as more Pi tokens are moved off exchanges and into long-term storage, the circulating supply shrinks, which can put major upward pressure on price if demand continues to climb. But perhaps even more compelling is what's happening across the broader crypto landscape. Bitcoin recently broke above $100,000 for the first time since January, reigniting bullish sentiment throughout the entire digital asset market. And we all know what happens when Bitcoin leads, altcoins follow. That's exactly what we're seeing now. Speculative tokens with high upside potential, like PEPE, Floki, and now Pi, are drawing in traders looking for the next big runner. And Pi isn't just participating in the rally, it's leading it, outperforming many of its peers in terms of weekly gains. When you compare Pi's chart to PEPE's, there are some striking similarities. Both tokens have formed symmetrical triangle patterns with high trading volume increases. If Pi mirrors PEPE's breakout, we could see it hit the 0.236 Fibonacci retracement level at $1. And if momentum really builds, the 0.5 Fib level at around $1.39 might not be out of the question in the coming weeks. Fueling this speculation even more is the buzz surrounding a potential Binance listing. While nothing has been officially confirmed, rumors are swirling in the community. And here's the kicker, PEPE's daily trading volume has skyrocketed over 150%, hitting $308 million in a single day. That kind of activity typically precedes major announcements or exchange integrations. Could a Binance listing be around the corner? It's not guaranteed, but the signs are there, and traders are positioning accordingly. Another major development that could move markets is expected on May 14th. The PEPE core team is reportedly planning a big announcement, though the exact nature of it remains a mystery. Some insiders believe it could relate to the full Mainnet launch or a partnership that expands the PEPE ecosystem even further. If this announcement delivers, it could validate much of the bullish sentiment currently building in the market. Adding to the upward pressure is a notable decrease in sell activity. More PEPE holders are transferring their tokens into cold storage. That's a strong sign of conviction and a possible prelude to a supply squeeze. As more of the tradable PEPE supply disappears into long-term wallets, the amount of liquidity available on exchanges drops. If demand keeps rising and available supply keeps falling, prices could spike dramatically in a short period. At the time of this recording, PEPE is trading around 73 cents, just below the critical resistance at 78 cents. The next few trading sessions could determine whether PEPE breaks through this ceiling or retreats into a corrective phase. A clean break above that resistance could open the door to a retest of 95 cents, and from there, the big psychological level at $1 is within striking distance. But if the market fails to hold above 70 cents, we could see a pullback to previous support around 67 cents. Either way, it's crunch time for PEPE. In summary, what we're seeing with PEPE right now is the convergence of technical strength, on-chain accumulation, institutional involvement, and potential catalysts all at once. It's rare to see this many bullish signals aligning. The whales are buying. The charts are primed. The rumors are building. And the PEPE community is watching with bated breath as we approach a possible breakout moment. So here's the real question, is PEPE about to go parabolic, or is this just another temporary surge? Let us know what you think in the comments. Are you buying PEPE, holding tight, or waiting on the sidelines? If you found this video helpful, don't forget to give it a like, hit that subscribe button, and tap the bell so you don't miss the major PEPE announcement on May 14th. We'll be covering it the moment it drops. Thanks for watching, and as always, stay tuned and stay curious.